We got a lot of earnings to watch this week, and again, some volatility surrounding the tariffs, and now that's calming down. We'll be watching that again. The sell-off I told you that was going to happen is happening. Here we have after the bell on Tuesday, we'll have Alphabet, AMD, and Snap. So we'll be watching that. We've got tech earnings. We've got some important earnings with Alphabet and Amazon. More S&P earnings, couple of Dow, and some tech earnings. So a lot of earnings this week. Amazon this week after the bell on Thursday. We'll be watching that, and we'll be watching things going forward on tariffs. I told you over the weekend that Mexico and Canada would be making concessions very, very soon, and that's happened. A day and a half later, we now have it happening after the February 1st deadline, happening here on Monday during the market session. Mexico, and then after the closing bell with Canada. Trump has agreed to immediately pause the tariffs on Mexico for 1 month, as Mexico's president agreed. She agreed to supply 10,000 Mexican soldiers on the border to deal with the drug trafficking, which is, again, one of the concessions that the United States wanted. So I told you this was going to happen. You'd see concessions out of Canada and Mexico. All their exports are coming to the United States. A good majority of them, as I talked about over the weekend, they want to do business with America. And again, doing retaliatory tariffs was not the right choice, and only pushing their economies closer towards recession all that much quicker. Again, President Trump is using this as a bargaining tool to resolve issues and grievances that the United States has at the border. The border crisis, human trafficking, the drug crisis, fentanyl coming into the country. Get that. I'm not a fan of the tariffs. I'd rather have tariffs than people dying from drug overdoses or human trafficking going on. So I get it. And I don't oppose the tariffs. Even though I don't like tariffs, I do understand that it acts as a tax and it could slow consumer spending and the GDP, but it's not inflationary as we keep being told. Well, I'm no fan of Trump's tariffs. I'm not going to falsely claim that they create inflation when they do not. People run around saying that. It's just simply not true. Would it hurt consumer spending? Yes. Hurt the GDP? Yes. Will it cause people to have less money for other things? Yes. Not going to cause inflation. I think Trump's just using this as a bargaining tool to get what he wants. I'd rather have them using tariffs than military force or taking military action. I think it's a way to negotiate, understand what he's doing, and I understand the risk to national security over it. But I don't like tariffs. But I don't oppose these tariffs because I am opposed to human trafficking, and I am opposed to the drugs that are killing America's children. Now, this could be an issue 30 days from now if further concessions are not met by Mexico and Canada. Now, let's briefly about Canada. It's a 30-day pause, so we'll see what happens. And again, as I continue to warn, I think we're going to go higher. I think we're going to peak, and it could be this issue. There could be an inflation freakout, as I continue to say. Wall Street believes that the tariffs are inflationary, and again, the Fed, so could be concerns that we're going to get this massive inflation, and we could see the stock market begin to drop 20% after it reaches my levels and completes a blow-off top. I'm still bullish. I still think it goes higher. It's going to top around the 63.40 area, the trend lines I'm talking about, maybe a little bit higher if we take a little bit longer to get there. But 1 month from now, this could be an issue again. This could be back on the table. Are you picking up what I'm throwing down? Now we've got Canada. Canada is also getting a 30-day delay. Trump pausing the tariffs on Canada for at least 30 days, Trudeau is saying. This came a few hours after Mexico's president agreed to make concessions after, again, Trudeau now makes concessions agreeing to target the flow of deadly fentanyl across the border into the United States. So again, glad to hear it because, again, thousands of people are dying from this. So if it takes tariffs to fix this issue, so be it. concessions from China, or I'm sorry, from Canada and from Mexico. I think China's going the court route there. Now, the one thing I talked about with Trudeau is Trudeau didn't bother. You know, he went to Trump just tariffs were announced, but then never followed up, never tried to work it out before the problem happened, before the February 1st deadline. Glad to hear that they came to an agreement here. Glad to see some concessions were made. There's going to be more concessions being made, as I talked about over the weekend and in this video. It could be we have this delay, postponing the tariffs for 30 days, and then they're implemented and they remain if further concessions are not made. Are you picking up what I'm throwing down? Now, again, there could be more concerns about tariffs with the EU and the UK. So again, we could have more volatility surrounding this, just like we had in 2018. And it went, once the pause ends, in 30 days, we could have a whole lot more volatility being up at key resistance levels. So do keep that in mind. This could be a preview of coming attractions. Just quickly, again, concern is that we're going to have a trade war and that the tariffs are going to create all this inflation, which again is simply not true. Well, tariffs may hurt consumer spending and they act like a tax and they will leave less money in your pocket to buy something else. It can push us closer to recession. That's why I'm not a fan of tariffs. It will not cause inflation, but it will cause prices to rise. Some prices on which the tariffs are attached. Inflation is not rising prices. Inflation is an increase in the money supply caused by excessive government spending, which all prices rise, not just some. Tariffs act like a tax. Some prices go up, some prices go down. Sometimes tariffs can create an oversupply in places and create lower prices. Tariffs do not cause inflation. Yes, they can raise some prices. Is inflation going to go higher? Yeah, it's going to go higher. Why? The money supply is increasing for the annual. We just got the year-over-year number here for 2024, and it's up 3.9%. So the CPI is eventually going to rise. Inflation rose right before the recession in 2007 and during the recession. But finally, the deflationary bust happened and it dealt with inflation. You're going to see the same thing here. So I'm telling you, even if inflation rises, we're going to get the Fed aggressively cutting. The myth is, oh, inflation's going up, so the Fed can't cut. Well, the Fed is going to have to deal with an inflation or deal with the recession. And I'm telling you, they're going to aggressively cut. The experts now telling us that the tariffs are going to make it to where we get no cuts. Economists now coming out and saying, oh, we're not going to get any cuts, and this is making it to where the Fed's not going to, and the Wall Street believes that the cuts are bullish. The cuts are bearish because they're associated with an economic downturn. They're associated with the coming recession. Wall Street believes a lot of things that aren't true. They believe that tariffs are inflationary. They are not. They believe that the rate cuts are bullish. They are not. Wall Street believes that the AI bubble is never going to end. It has likely ended with the breaking of the trend line that I talked about with NVIDIA, and I'll talk about that probably before the weekends. I'll show you the charts about a little bit last week. But the tariff issue is not going away, and eventually it's going to give us an inflation freakout up at the top. In my opinion, I think it will be part of it. You still have a 10-year yield trying to bounce around the 50 right here, and it tested it again today. So we're watching, is this peak going to hold, or we're going to get a counter trend that gives a lower high, and eventually we go lower? We're going to try to exceed this level and form a double top at that previous peak that we've talked about. To the 10-year very closely, and again has a negative correlation with the market. Now, the VIX is predicting that we're going to have a bottom or a bounce in the next 2 trading sessions based on percentage. We moved higher by 13%, gapping higher. We didn't close at the highs. We got a black candlestick. And notice the VIX. The VIX had already had a topping tail and peaked over here. Now we're getting a lower high. The VIX topped before the S&P bottomed, as I talked about. We've had that before. We've seen it this time as well. We had that back over here at the January low. The VIX got a lower high. The S&P moved to a lower low. The VIX topped before the S&P bottomed, and you can see that back over here. We got that lower high. Here we've got the same thing. In this price action, we've got a high, and then we've got a lower high on the VIX. Here we have a lower low on the S&P and a candle of indecision. So again, it may not be over yet with our candle of indecision. We still get divergences forming on the intraday charts. We'll be watching, but again, I do think that we will not take out the January low, and I think we establish a higher low. We still may go down into the golden pocket between the 61.8 fib and the 78.6 Fibonacci, and you'll see that on the 60-minute chart. Hit the 78.6 Fibonacci, you're going back to the CPI gap fill. I don't know that we go that low, but again, we're going down. I've been predicting. Please support the channel with the link directly below. That allows me to be able to provide you this information. You follow the link below to take you to a secured site. You can donate any amount you want. Again, most YouTube channels make their money by sponsors. I turn those offers down. I don't want to sell you stuff. So I just ask that you take a moment and partner with me and support the channel today. If you can do that, I would really, really appreciate it. I need to hear from you in order to make that work. If you like my charts, you like my indicators, you like this information, then please consider partnering with me. I thank you. I thank you for your consideration for that. Watch the video all the way through. Important stuff going on. The pullback that I predicted is now happening. Just nailing it. More about the S&P and the NASDAQ. Now, I warned you we can get a bearish reversal of conditions, meaning the momentum is changing. Okay, and again, to allow this pullback, we now have come back and fulfilled the gap. We're back testing. Still may be that we get a bigger pullback. Let me just move this so you can see the Fibonacci is again directly below, and we didn't quite reach it. It's at 59.09 is our 61.8 Fibonacci. The low is at 59.23, filling our gap but not reaching that 61.8 Fibonacci. We may not, but if we do, that is at 59.09. If we go back and fill the CPI gap, the rally with the CPI, it is at 58.49. So we'll be watching these levels closely, which is the golden pocket on the S&P 500 between the 61.8 Fibonacci and the 78.6 Fibonacci. That is a golden pocket. I believe this low will hold, but I'm looking for a bottom here, and I told you a back test and maybe hitting the 61.8 Fibonacci or moving slightly into the golden pocket. We'll be watching. Eventually, we got to see momentum flip back up. I think it will. But again, right now, you got the 10 above the 50. The 20 is not there yet. We're probably going to see a bottom carve out here and the rally, and then get a bullish arrangement of the moving averages before going higher. Again, I'm looking for clues. Do we now have a bottom in, or is there a little bit more work to be done? I'll be watching the Fibonacci retracements. Well, I predicted the pullback. After predicting the rally, or the bottom in the rally over here, again, I expected that the pullback would happen, but again, divergences still might form on the intraday charts. The NASDAQ also having a bearish reversal of conditions, dropping below the 50, dropping below the 20-period moving average, going back up to filling that gap. Got a series of lower highs on NASDAQ, and again, with our topping till of December in the monthly time frame, it's very possible NASDAQ has peaked. We're looking for clues. I am not sure. I wish I could tell you for certain if it has or hasn't. I need more evidence, and so again, I'm looking at it closely. If NVIDIA continues to struggle, that could put real pressure on NASDAQ, and sometimes NASDAQ and S&P diverge from one another. But right here, again, going to be watching the NASDAQ closely. Do we go back and try to fill the election gap rally? The S&P already has, and I got that wrong. It's this one right here. The S&P already has, here's the election gap at 20,227. If NASDAQ struggles with NVIDIA or with a tech sell-off or earnings, as we're in earnings season, we're going to get some important earnings this week, then it's possible that NASDAQ stops making new highs. So do keep that in mind. But we did get a reversal of conditions along with the S&P today. We'll be watching. And NASDAQ may make new highs, but so far it's struggling to do so. The S&P just made new highs in January. NASDAQ so far has not. The December high continues to hold. You can see here that NASDAQ went up and back tested this trend line. We had this trend line of this rising wedge. We overthrew the upper boundary. We broke down, back tested, and then broke down or I should say went lower, and then we bounced and we back tested it again. So we now have potentially a channel if we can bottom out here without doing this. But if we go lower and we break this trend line from this low here in January and our August low, then that we could come back and fill the gap here at 20,227. The election gap here has never been filled on NASDAQ. It still may do it. If we can rebound and possibly go back up and exceed this high, then you've got a shot at making new highs. So we'll be watching. I'm not sure if NASDAQ has topped yet. Well, just may go sideways here as the S&P goes higher, like it did in 2022 for the S&P. The S&P went and made new highs the first week of January of 2022, and yet NASDAQ went sideways during November, December, and early January. And again, often diverge from one another. So we're watching closely. But I have drawn this blue channel in here. And again, we'll be looking at that. And this trend line right here, if we break it, the risk is we come back and fill the gap, immediate gap right here. We have a gap from the CPI, which is right there. And then we have below that, we have the election gap fill right here in our 200 period moving average. So that is a risk that we stop making new highs and that we end up going lower and taking up a January low. That would be bearish for NASDAQ. The bullish scenario is that we get a higher low and that we can get momentum going back up. It doesn't have to diverge with the S&P, but sometimes it does. So we're going to be watching. And again, do we have rotation where we see tech selling off, yet maybe the Dow and the S&P going higher? Dow's got that possible double top. It was a Dow bullish diversions that tipped us off to the bottom and to the December top. Again, if the Dow can recover, which right now it's attempting to, it's got a bottoming tail here. We'll be watching. Is there more work to be done, or again, will the Dow try to go up and exceed the December high? We'll be watching this closely. But you got a possible double top, and oftentimes the second peak will overthrow the first. We'll be watching the Dow closely. I think we have some Dow earnings this week, I believe. But a bullish hammer. We got a candle of indecision on the S&P. More of a spinning top kind of looking candlestick on the S&P right here. So again, we'll be watching to see if we end up going closer to that 100 period or the 61-point Fibonacci into the golden pocket or not. Hollow red candlesticks nonetheless, and we got a hollow red candlestick here on NASDAQ as well. So again, going to be watching. Momentum did shift down. We'll be watching what happens. And again, you got that gap directly below on NASDAQ. From the CPI rally, and that's near our 100 period. Yeah, we may see divergences develop, like with the RSI here on NASDAQ, and this is the 15-minute chart. We may see something similar with the recent price action here with the MACD. So again, just worth paying attention to the gaps, the CPI gap over here, and below that, the election rally gap back from November. Remember, momentum just turned in the daily time frame today, so the volatility may not be over yet. We'll be watching. NASDAQ again formed a bear flag just like the S&P going into the gap fill from the gap down from the deep-seek sell-off, and we're coming back here and again trying to backtest this area. We overthrew it previously, but we didn't move to a new low. The S&P did. Does NASDAQ move beyond the deep-seek sell-off low here? Again, 20,227, the election gap fill there, and then our CPI gap fill down here directly below the January low. Pardon me, the deep seek low, the deep seek sell-off there. Could we form a divergence here on the RSI and on the MACD? We're going to be watching. If you look at this up close, here's our low from the deep seek sell-off right here, and here we came down just to right above it right there. Again, still might take it out, still might see divergences develop on the MACD here and the RSI going beyond that level, and if so, we've got that gap fill right there with the CPI rally. So, and again, that is just below that 20,800 area, so we'll be watching this gap here very closely on the NASDAQ. Now, in a moment, I'm going to be talking about the concessions that are being made by Canada and Mexico. I think is going to bring this to a conclusion here, but then again, it's being paused. We're likely going to see concerns, in a month from now, probably be slamming up into my target levels right about that time when we get the next concern about inflation. Now, just real fast, again, I talked to you about the market selling off over here this is a 5-minute chart. I told you we were going to get a sell-off. We ended up seeing it with the deep seek sell-off here. We rallied up to fill the gap, the deep seek gap there at 61.01. And I told you we were forming a bear flag and we were going to likely come take out this low. And again, thought the sell-off was over. I told you, I stuck to my guns and I told you I didn't think it was over. Even though I predicted the sell-off here, I didn't think that was the bottom. And that's now been proven correct. We're about to bottom or have bottomed today, one or the other, depending on if we see divergences, if we get another leg down or not. We'll see. We've got earnings, economic data. We got private payrolls on Wednesday. And then on Friday, we'll get the jobs report. Now, eventually, we're going to get a negative number with the jobs report. We saw deterioration in the labor market from 2023 to 2024. That's telling us recession is coming. We've seen the Psalm rule triggered with the unemployment rate. That's telling us recession's coming. Powell dismisses that again and again. I believe the recession indicators. Obviously, he doesn't. Reliable recession indicators. But again, we're going to be watching the jobs report later in the week. Expected to come in 169,000. Previously at 256, the unemployment rate is supposed to hold steady. We'll be watching that eventually. This is going to be a negative number at some point just before the recession starting, or as we go into the recession, you're going to start seeing a negative number. So back to the S&P, I'll be watching. Do we end up getting a divergence or confirmation of a higher low? Again, the sell-off I told you that was going to happen is unfolding in an ABC move. It may or may not be done yet. We'll be watching for clues. But again, once it's done, and maybe we go up and fill the gap, and then we come lower or come back and get a higher low, we'll be watching to see if the move is done. You still have the 61.8 Fibonacci that might be reached. Doesn't have to be. Maybe we bottomed. But I told you the sell-off that I was looking for has now happened, and our bear flag played out very, very nicely. Calling the sell-off before it happened, and over here again the rising wedge that we had before the deep seek sell-off, which I told you was going to happen. We were going to get the sell-off to backtest the bull flag. The bear flag here did that. Here's a 15-minute chart. That was a 5. Here's a 15. We still might get a divergence here on these intraday charts. So again, we still might have another testing of this low. I told you we were going to come back. Way back over here, see the rising wedge, and again, it evolved into a larger one right there. And it's funny, the Bitcoin ETF is doing the exact same thing, formed that negative divergence. Here's a 15-minute chart, and again, we still might see a bullish divergence develop on these intraday charts. Here it is right here on the RSI. If we turn back down, we'll see if we take out that low. If we do, then we'll be watching our 61.8 Fibonacci in the golden pocket, and also gap support right here from our CPI rally. Build the gap today of the breakout of the bull flag, which I told you was going to happen. And again, here's our bear flag right here coming back. We broke that on Friday when the White House press secretary on Friday confirmed that the tariffs would be going into effect over the weekend. Market began to sell off, and that we had an immediate back test at the very end of the session and then gapping lower. So again, looking for a bottom in this area. I think we're going to go make new all-time highs. I remain bullish. I predicted the pullback and I predicted this momentum shift, but I believe that we're going to establish a higher low above this low right here. I warned you that we're going to form a bottom over here and we're going to rally back up. And as we rallied back up, I told you we were going to pull back and back test the bull flag. Everybody was telling us we had no. We had this head and shoulders pattern and it's over and we're done and we're all gonna die. And I told you we're bottoming out. The people that told us the sell-off from December wasn't going to happen got very bearish down here, and that's why I told you when we on the 9th and 10th that we were likely going to fill this gap from the presidential election, hit the 2023 trend line, and bottom out. And that's exactly what happened. And again, we had the bullish diversions ahead of the presidential election. These divergences on the RSI, on the 60-minute chart with the RSI, have been absolutely incredible, absolutely amazing. Told you again that we would bottom. We did. I told you the 9th and 10th we would bottom the following week. That was correct. Told you we were going to rally. That was correct. I told you we were going to get a pullback. That was correct. Make new all-time highs. We've now seen that. That was correct. Told you we formed a bear flag that was going to give us another low. That was correct. So again, just nailing it. The 50 is still above the 200 period moving average, but we never did reach the upper boundary of the bull flag. We are now doing that, filling our gap at 59.38. We have our 61-point Fibonacci at 59.09, which is right here near gap support. Right there, just a little bit lower. We still could form a divergence, but I continue to believe that we have an ABC structure and that we're going higher, that this is wave one. We completed minor wave four. When everybody was telling us we had a head and shoulders, I said, no, we're evolving into a bull flag that's minor wave four, that we're going to get minor wave five and go higher. That, in fact, was correct. I believe we have subwave one of that minor wave five, and I think we're getting an ABC structure that's completing wave two. Maybe it's done here. Maybe we go a little bit lower and hit our 61-point Fibonacci and get a little divergence here, maybe on the 60-minute chart right there, even though we're forming really this larger divergence right here from that low from the deep-seek sell-off. Again, it could be that we get one more little push down right here, or even just get a higher low if the low here. But we've gotten a pullback I was looking for. It may be done, but I'm not so sure that it's done. It could be that we get one more push down. But I think that we'll see a rebound back up. Now, it could be we get a gap fill and then come back and just get a higher low or something. That's certainly possible as well. Again, today's low might have been it on the tariff scare. Concerns about a trade war, concerns about inflation, and all the rest of it. See what I'm looking for, and look right here on the MACD. Here, again, I think we're forming a divergence. This is why I told you I thought we were going to get another sell-off and have that MACD roll over. That was correct. And again, I think it's carving out here, and maybe it's done. But don't rule out that we get one more push down. That's certainly possible if we try to tag our 61-point Fibonacci of this entire advance. We'll be watching to see how that unfolds. But the sell-off I told you about has happened, and it very well could be done. We're looking for clues, but a big rebound back up. We're dropping over 2%. Signals continue to nail it. Now, quickly, the market was at much lower levels. We recovered once Mexico began to make concessions, and Trump paused the tariffs for a month here. So we'll see what happens with that. More about that in a moment. And Canada, it was down almost 123 points of the S&P. And again, it could be forming a massive double top, and it may not be done yet. And it could make new highs here and form a double top. The S&P 500 down 0.76%. It was down over 2% at the lows, down 46 points. Much lower than that, again, to fill our gap at 59.38. NASDAQ, which I told you was going to happen. NASDAQ down 1.20. It was down much lower. The Dow was down hundreds of points. Saw this recovery. Tariffs are giving us a short-term period of volatility for our wave two. I think that tariffs will be giving us more problems in a month from now. I think that that's going to be the case. And then we had the Russell up 1.28%. The VIX was up 13.33%. And you know what that means. That means in the next two sessions, the S&P will have an up day. The VIX is predicting an up day. And by the way, the VIX not moving to a new high. The S&P moved to a new low. Again, the VIX often tops before the S&P bottoms. Could be carving out a bottom today or over the next day or two. Again, we've got earnings. We've got economic data we'll be watching. But the VIX is predicting we're either going to get a bounce or a bottom in the next 2 days. That's what the VIX is predicting. Now, as I've been calling for this pullback after the rally, again, I told you I think it's wave two. I told you we were going to get a back test, and again, in the 5-leg push higher. Let's look at this on the daily chart. Now, this is the close-up of it on the 60-minute chart. Let's look on the daily chart. Now, here it is. Again, this is why I told you we were going to get a sell-off, because I thought we would back test the bull flag. We bounced out the trend line of the 2023 low with this bounce right here and the 100-period moving average filling the gap. But I told you that's why I thought we'd bounce down there. So I think we're setting up a higher low. Maybe it's done. Maybe might have a little bit more work to be done. We'll be watching for clues. But again, Major concern about tariffs is on the back burner now. I have more concerns about it going forward. Believe me, we're going to. Now we have earnings. Now we have the economic data. We got the jobs report. Again, we'll be watching. So I think we're going to end up going higher here. I think we're going to end up rising to a new all-time high, slamming into this trend line from the July peak, which again I believe is pointing to the next top here, the next highs, which I believe will be the top, and the final climax rally, the grand finale. So again, once this is done, and maybe there's a little bit more work to be done, we'll be watching. We get a candle of indecision today. Here, the 10 has already gotten above the 50. The 20 is not there yet. It's about to. I told you we'd get a pullback first. That's why I told you we are likely going to back test this level. So continuing to nail this, but again, there might still be a little bit more work to be done before we get the bigger rally that I'm looking for. But we're probably going to rally into the next announcement for the tariffs. That's probably what's going to happen. I do think an inflation freakout is coming surrounding the tariffs, surrounding the inflation data starting to rise back up, and we know it's going to rise back up. The M2 money supply is rising on a year-over-year basis. Now, if we zoom out here, again, you can see this whole thing, this whole rising wedge I have here on this chart. And this is, again, the 2023 low. I predicted a bounce off of this trend line and filling that gap from the presidential election over here. And I told you, again, that we'd likely bounce and rebound and head back up to this other trend line. That's all now happening. But we're getting the pullback first that I predicted after predicting that bottom. So it's just continuing to nail the turns. It's really just playing out beautifully here. And again, I think we're eventually headed up into this area, probably going into the tariffs. And again, they're paused. They didn't go away. They're paused, and we still may get them. And that could be part of the inflation freakout. But I think that this is where the market is going to put in a major top. You're going to have a 20% crash. Follow this. The Fed will freak out. And again, at that point, do emergency cuts on the 20% crash. And this rising wedge is in the larger channel in the weekly time frame that I've talked about. I think we're headed to this trend line right here and the trend line, the upper boundary, and they intersect going into late February on into maybe early March, depending on when we come into contact with it. But they intersect in the coming weeks ahead, which is likely going to be as we move closer to possibility of the tariffs being unpaused, which very well could happen. Buys us time. So again, don't think that the tariffs are going away necessarily. We have a pause. With the Fed, we have a pause with the rate cuts. That doesn't mean they're done. Telling us we're not going to get very many, and the experts are telling us, well, we're probably not going to get any, but recession is telling us otherwise, and I believe the recession indicators. The rising wedge you just saw on the daily chart pushes right into this upper channel line of this larger channel on the weekly chart. And again, I think that we're going to bounce here. Maybe we go a little bit lower, and if we go a little bit lower, you might hit the trend line again. So do keep that in mind. Right now we're testing our 20-week moving average. A little hard to see there because I marked this this line right here that's pointing up to where I think we're headed. But I think we do that. And again, the trend lines are my target level. And again, if we take longer to reach them, they'll be higher. If we reach them sooner, it will be lower. I think it's coming in right around the 63.40 area right now. If we take longer to reach that, maybe it's a little higher, maybe it's a little lower if we reach it sooner rather than later. The trend line's a target, not a number. So make that clear. I think that'll be followed by a 20% crash back to this trend line right here, where the Fed will panic, give us a counter trend rally. Then we're going to sell off some more. And then later in the year, we'll likely get a rally surrounding hopes of tax cuts. But again, it will be too late. The recession will likely have already started. Before the recession starts, the stock market will peak and begin to start to price it in. You're going to see this 20% sell-off. This is what's happened in history. Now, again, we have this multiple point divergence. My guess is we're going to get one more push up into this level and then reach out. We had the channels reached with the Dow. We had it reached with the Russell. But the S&P never did reach it. I think it will. Bitcoin never reached it. Bitcoin and the S&P are doing exactly the same thing. They're the Bobbsey twins. They're doing the exact same thing. I'll link my latest Bitcoin video at the end of this one. And if you look at the Bitcoin ETF, IBIT, it is a carbon copy of the S&P 500. It's pretty remarkable. See that if you watch the video. Pretty interesting. Want to know what the S&P is doing? Watch Bitcoin. We're probably going to see a divergence develop in this most recent price action on indicators here and get one more push up. I think we buy a little bit more time. And again, I think that will complete our minor wave 5 here. I think that will complete these 5 intermediate waves right here higher. And I think that will complete this whole thing as primary wave 5, as I've said. I also have some Fibonacci extensions that go right into the same area. Maybe I'll take the time to show you that tomorrow or this weekend. Pretty amazing. A bunch of target levels are all pointing up into this area. It's pretty amazing.